Hello, my friends. It's Robert Miner with Dynamic Traders Group with a brief video update of three of the markets that we cover most often here in these YouTube videos. This is a very shortened version of the type of video that I would give our subscribers twice a week, as well as we have a Monday update. So we update our markets 3 times a week in the DT report. So if you want to learn more, if you want to keep updated more, go to dynamictraders.com and check us out on the DT reports. So again, we're going to look at the S&P, gold, and Bitcoin today. So let's get started with the S&P. Well, this is the ES weekly data, just the closes, and we'll just go real briefly over this. I'm only looking at the advance off the October 23 low, probable 1, 2, 3, 4, and more than likely this is going to unfold in what we call a fifth wave or ending diagonal. And more than likely, as of 2 weeks ago, based on weekly closes, a weekly high was complete and will be sideways to down for 2 or 3 weeks. Now, that should be a wave 4 correction. So we'll just start with the bottom of this chart here. Is the weekly momentums just last week finally made a dual look back bear reversal. So that's a pretty strong signal that a weekly high is complete. Of course, we want to have some confirmation. We'll take a look at the daily in a minute. It made it right in 2 key time factors, weekly time factors, for a weekly high. So the assumption is that a weekly high is complete, but we need a confirmation. Let's go to the daily data. This is the ES December daily data, and coming off of the what I had labeled as a wave 4 August 5th low is a potential 1, 2, and a 3. And what's the confirmation we need? We need a close below 5804.50, and it's a little bit below the market. The ES has already made the initial reversal signal. It made it and confirmed it on last Wednesday, but then we need a confirmation of that reversal. However, the thing to keep in mind is this decline should just be 2 to 3 weeks, something along that line, maybe a little bit longer, but 2 or 3 weeks would be ideal, and it should be a correction within an ongoing bull trend. Now, there's an anniversary date study, election year cycle study that I updated for our subscribers along with the trend position of the market just a week or so ago, and went into the detail on why an October high should not be significant, should only be followed by a corrective decline. So that's what we're looking at over the next 2 to 3 weeks, prior to that year-end fall to year-end net bull trend that is typical in an election year. So again, this is a real important market, I think, and that's why I just updated our big picture report. You might want to check us out at dynamictraders.com. This is Bitcoin weekly data, and there's nothing that's changed with our outlook for Bitcoin in several weeks. So I'll just review briefly where we're probably at with Bitcoin anyway. Is the major trend is bullish off of what I anticipate this early September was an ABCDE corrective low. If that's the case, Bitcoin should be net bullish, probably into at least the first or early part of next year, and should reach at least around 81,200. That would be the minimum probable target as long as we have a bullish continuation. So that's more than likely the outlook. Here we'll go to the daily data, and off of the October 10th low is, well, let me go back to the September low. Impulsive advance, corrective decline, continued impulsive advance, and over this past week, Bitcoin has just been sideways, has not made a typical sort of correction, but during that sideways move, the momentum cycle has reached oversold. That's actually quite a bullish sort of momentum price relationship. So I believe that Bitcoin is within a day or two of completing this correction. Whether it's going to reach 50% retracement or not, I don't know. Time is running out for a typical correction. So what I'm looking at, and I've set an alert, is just a close above the October 24th, that's Thursday's close, should result in a continuation of the bull trend. And as Gann said, or maybe it was Jesse Livermore, I don't remember, there's no price too high to buy as long as the trend is up. Well, more than likely the trend is up with Bitcoin, and once this flat correction is complete, we got another leg up. So if you're not already long from this ABC correction, which was just an ideal position to get long on this back on October 11th when he made that sharp bull reversal. That will be another opportunity to either add to long positions or to get long for a continuation of a bull trend and for minimal capital exposure. That's what trading is about. It's not really forecasting the future. It's identifying the position of the market, the probable outcome, and then how can you trade it with acceptable capital exposure? Well, if Bitcoin closes above the October 24th low, we can bring our stop on the original positions up to just below last week's low, because it's either a continuation of the trend, and if it breaks out and then immediately turns around, that's something else is going on other than what I anticipate, at least. So we'd get stopped out really quickly. Don't need to be leveraged. There's very high volume, secure ETFs. Fidelity's got one. Other companies have them. Check it out. Good opportunity, I think, to add to positions in the next day or two. So this is gold weekly closes. It's the December contract. And what I'm really interested in is the advance off of the October 2022 low. In Elliott Wave terms, probable 1-2. So we're probably at or very near the completion of the wave 3, which would then result in a several weeks to even several month corrective decline. Now, I've been looking for the end of this wave 3 for a few weeks. It reached the minimum targets to be complete a few weeks ago, 3 or 4 weeks ago, and it's extended up to what we consider the extremes in time and price to complete the wave 3 coming up from this low. And keep in mind, when it's complete, then gold should be sideways to down for several weeks, maybe even into early next year. But any decline should be a correction in a much higher time frame bull trend. I just completed, I don't know, it's a 10 or 12 page big picture update on gold for our subscribers. It's just out this past week. And I take the data all the way back to the early 1970s, right up to date, right up to some daily closing data like we're looking at here, to get a sort of a big picture idea that if we have a correction, where it should go in the next few weeks prior to the continuation of a bull trend and then some of the targets on the upside. But those will probably not even be approached till later next year, basically about a year from now. So great opportunities in gold almost all of the time. Right now, though, just be aware, probable weekly high is either complete last week or will be, say, in the next week. We have time and price pattern. Everything came together this past week. This is the daily closes, and what we're just concerned with is the advance off of the June 2024 low. Boy, it just looks like an almost ideal 1, 2, 3, 4. And when this section up is complete from the October 9th low, that'll not only complete this 5-wave advance from June 2024, but it'll also complete the higher time frame advance from the October 2023. So that's why we focus in to the relatively short term once we get near those extremes. Well, I hope you found this video useful. If you like what you heard, you liked what you learned, check out our DT reports at dynamictraders.com. That's it for today. Hopefully I'll be back with you in a week or two with another update for YouTube subscribers, followers, and Twitter subscribers and followers. Everybody take care, stay healthy. It's Robert Miner, over and out for now.